please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
All right, those are our top stories. Let's get started and invite our two experts. We have, and of course, it's Ladies Special being Friday. So we have Mayuresh Joshi and Prakash Gaba who are joining in to answer all the queries that are going to come in from our women viewers. Gentlemen, good afternoon. I hope you're all set. And before we get started, some news flow also on KEC. It's a 1,000 crore rupee order. So that stock should do well also. All right, our first caller is through to us. Ms. Sindhu Bose is on the line with us from Dubai. Hi, Ms. Bose. How can we help you? And thanks very much for watching our show even in Dubai.
Hi, good afternoon. I have IG Petrochemicals around 800 shares, which I bought it for 640.
Okay.
I would like to know for the, midterm prospects of that particular stock.
Okay, you have a portfolio of stocks otherwise. Is this one of the many stocks that you have?
Yes. I have around 20-25 stocks with me and few chemical stocks.
Okay, so you're a seasoned investor. All right. So, Mr. Gaba, let me ask you on this. IG Petro, she's making quite a bit of loss, actually. She has bought it at about 640 odd levels. What would the advice now be? Should she remain?
IG Petrol is at 481 now. Or am I seeing the wrong stock?
No, I think you're 483, yeah.
482, correct. Yeah. And she's bought it at?
640.
Well, hold on, because it might see some lower levels, but I like the structure near the lows, seen a good bounce from 420 zones. It's likely to go to 660. There she needs to take, once again, a fresh look at it, but looks like 660 is possible.
All right. So I hope that helps you, Ms. Bose. Thanks a lot once again for calling. With that, we move on to our next query. Mrs. Kanak Narayan. She writes to us from Arunachal Pradesh. She holds 200 shares of Tata Chemicals at 648 rupees for the last 10 months. A long-term investor wants to know whether to hold or sell. Mayuresh, for Tata Chemicals, she's making a fair bit of profit, actually 23,000 rupees odd out there. What would you suggest one do for the long term, especially given, that trigger of simplification of the Tata Group companies, especially the consumer brands?
Afternoon, Mangal. Absolutely, you're right. I think the simplification of the organization structure is going to unlock value in terms of what the core businesses can deliver over the next few years. Now, coming to the core businesses itself, you probably have seen the soda ash volumes being a little tepid in the quarter gone by, but they were because of plant shutdowns in the US, some issues faced in the African operations, and a large element in terms of the energy costs actually moving higher. So what you saw in terms of crude, coal costs moving up, I think that did affect the overall margins of the business. But the company is expected to take hikes. He had taken hikes of around 400 rupees a ton in Q4, and if this persists, they might do that. On the consumer-facing businesses, Mangalam, you're absolutely right. I think when you're talking about the salt businesses for Tata Chemicals, I think that is probably expected to grow in a significant manner, and the products that they're expected to introduce, their own expectations are a 500 crore top line from the 200 crore that reported last fiscal. The specialty chemical, which obviously houses the sodium bicarbonate business, and obviously has a huge potential in terms of the new nutraceuticals products that it is doing, and the highly disposable silica, I think that can have a huge amount of contribution in terms of their overall SOTP contribution. And though I think the urea business sale and the phosphatic acid sale probably will come into the price going forward, I think the overall debt level should also start receding. So I think the new businesses should generate reasonable ROCs as well. So our own prospects on Tata Chemicals probably looks very, very sanguine in terms of the new businesses contributing these significantly with ROCs and margins expected to remain stable. So I think a clear hold from my side if the investor is a long-term investor.
All right, makes sense. For the moment, remain invested. Our next caller wants to talk about ICICI Bank. Nikita Patil has written to us from Mumbai. She has 9,000 shares, which she has bought at 270 rupees. So she's well in the money at the moment. She's been holding on for 6 months. A long-term investor wants to know what to do. So I suppose, Prakash, she ended at a good level and perhaps at the highs, perhaps at the best level this year. What should she do now on ICICI Bank?
Continue holding it. 250, very strong support zone. The more you hold, the more you hold. Looks like it's bottomed out now here, and I think it's heading up. The 360, the high that we have seen in recent times, looks like that could be taken out as well.
All right, Mayuresh, fathom a view on ICICI Bank?
Oh yes, and again I think the entry point was very good for the investor. And as far as the business dynamics are concerned, yes, you did see some amount of apprehensions because the provisions still remain elevated, and they would over the next 2 to 3 quarters as well, both aging related as well as the off-balance sheet items that you're probably looking at, and the exposure to the BB rated and below, which is still around 9%. So the outside risks of elevated provisioning might still continue on the balance sheet. But on the brighter side, I think what has probably transpired in terms of the management changes that we've seen, I think that probably has got captured in the price at lower levels. What you're also seeing in terms of retail advances, I think the retail advances are growing at a very fast clip. They're almost 57-58% of the overall advances of the bank. And when you're probably looking at qualitative advances meted out even on the corporate side, I think that itself lends confidence in terms of the return ratios actually improving for the better. So I think the PCR, which stands at 66-67% is still expected to go higher. The NCLT provisioning already stands at around 67-68%, so they are well provided for on those two fronts. But a large element in terms of their ROE is actually improving to 1.1% over the next 2 years. ROE is to 11%, and even on a price to adjusted book, I think the bank looks reasonably valued for the growth prospects that they can offer. So I think a clear hold from our side as well.
All right, a clear hold from Mayuresh's side as well. With that, we move on to our next query. Mrs. S.R. Mittal, she writes to us from New Delhi, holds about 1,200 shares of PC Jeweler at 200 rupees for the last 2 months. Is a long-term investor, wants to know whether to hold or sell. Well, Prakash, what would you suggest? PC Jeweler, a person has bought it at 200 rupees, and this is after, the stock correcting a fair bit. Maybe they thought it was perhaps a punt or something at 200 rupees, and now it's down to about 84, 85 rupees.
Punt is a lottery. You get it, you find. You don't. I think you loss. Exit, simple, weak structure. Why should you want to be in this stock?
All right, exit. There's just no other way to say it. So I hope the investor was listening. Up next, Mrs. Padma Devi has written to us from Bengaluru. She holds 5,000 shares in HFCL, which she has bought at 19 rupees. In fact, she's been holding on now for about 5 odd years. So that has worked out well for her. Now she wants to know what she should do. Prakash, this a person has been holding on for 5 years. She's reaped the benefit of that. Technically, how's this level of 25 odd? Should she book profits?
Of course, book what? 5 years, Reliance would have seen something else.
Yeah.
So, if just little, you're making money out. Why should you wait for more than 5 years? It should be out in 1 year itself.
All right, unequivocal out there. Prakash is saying this will be out, and you have been holding on for 5 years. You will make some profits. You have made some profits. Take them home. With that, we'll slip into a short break. Come back. We focus on some more stock queries when we.
Hi, welcome back. Well, it looks like there's some bit of pace that's returning to the market, so a slight bit of uptick there. The mid-cap index now in the green. But let's address some more stock queries. Jigna Patel is on the line with us from Surat with a question on Dilip Buildcon. Hi, Jigna. How can we help you?
Yeah, I just want to know that I bought a share of Dilip Buildcon, 100 shares. So, what's the possibility of rise or decrease in this share? So I want to know the future of this.
And are you otherwise used to having multiple shares in your portfolio? I mean, is this your first few attempts?
Yeah, I have just quite less experience in this. But
no, I'm just trying to understand what place does Dilip Buildcon have in your portfolio? I mean, do you already have a positioned portfolio with large caps, etc.?
Yeah.
Okay.
I just want to know about Dilip Buildcon.
Okay, all right. Mayuresh, here's somebody who already seems to have a good portfolio going on. Amongst them is an investment in Dilip Buildcon, where she's losing a bit of money. Bought it actually close to its highs, close to about 1,000 odd rupees. You see it going back to those 1,000 plus levels?
So there is a possibility, because I think there are two things. One, I think the auditor-related issues is something which pulled the stock back quite significantly. To top that up, I think the issues cropping up related to the divestments of the EPC road assets to Shrem and whether the receivables would come through in this fiscal year as well. I think the management has tried to address both these issues time and again. And what you're probably seeing in terms of the financial performance, leaving these two issues aside, I think the financial performance for the quarter gone by was very, very satisfactory. So when you're looking at EBITDA margins at 17.8%, when you're looking at the overall order book at 24,000 crores, which gives very good revenue visibility. They've just won an order of almost 1,700 odd crores from the Maharashtra State Transport Department. So I think you're probably looking at execution capabilities still being there on the top. They're eligible for bonuses on that front. And on their HAM projects as well, where the IRRs are far better compared to the EPC or POT projects, you're probably looking at financial closure happening on 3 of their units as per their con call. And the remainder should happen over the next few months. So the SHRAM receivables should also come through as per the management commentary. And if all this probably encapsulates, I think you're probably looking at a very strong revenue growth. So again, gross debt at 3,200 odd crore is expected to come down, which means that debt equity should come down significantly over the next couple of years. The cash flows with good execution and expectations of better IRRs from the HAM projects should itself give balance sheet support. So I think the fundamentals probably in place for the stock. A clear hold from my side, but just keep patience over the next few quarters for that earnings recovery to play out.
All right, clear hold from his side. And meanwhile, just keep an eye out on Tata Motors in an otherwise weak market and the stock which has been weak for the last 1 year. Actually, it's down about 40% this year. That stock is at the high point of the day, Tata Motors. There is just a notice on the exchanges which says that the company is going to meet investors. They have Macquarie, Bajaj Allianz Life Insurance, JP Morgan, Fidelity, Wellington Management, and a whole host of investors from September 3rd to September 7th. So that stock is moving higher as we speak. It was already high, holding on in today's trading session, was outperforming, and that last bit of news has only taken that stock higher. With that, we have Lakshmi Singh, who writes to us from New Delhi. She holds 5,000 shares of Pheniotex Chemicals, 62 rupees for the last 6 months. Long-term investor wants to know whether to hold or sell. Prakash, Pheniotex Chemicals, how does it look on the charts?
Well, basically, it looks like there's a support closer to around 45 zones. And if it decides to go up, it needs to cross 60 zones. Once it crosses 60, then it's going to around 80 zones, where she should book out.
All right. On that note, I think we can take a very quick break, come back in a bit, and lots more stock queries to answer, so do stay tuned in.
Individual stocks, they're buzzing, and how? Coffee Day Enterprises, that one should come up for you, up about 8% as we speak. And funnily, is the same group company, Mindtree too, is moving higher as we speak. Mindtree is up 5%. Remember, Coffee Day holds stake in Mindtree, which is worth equivalent to the debt on their books, close to around 3,000 odd crores. And usually Mindtree's up move is followed by Coffee Day's up move, but today it's Coffee Day which is moving and Mindtree follows. Remember, midcap IT is also doing well because of the weaker rupee. All the IT stocks are fairly doing well. On the other hand, we have exporters which are doing well. Textile exporters, the likes of Welspun India, we have Indocount, Himmat Singh Said, all of them moving higher as we speak as well. So export-facing companies or export-oriented companies doing well on account of a weaker rupee. So we have pharmaceutical pack, the IT pack, as well as textiles. So that's those are the sectors that we'll watch out for. In the meanwhile, let's address some queries. We have Ms. Sneha Gupta writing to us from Jaipur, holds about 1,000 shares of ONGC at 188 rupees for the last 6 months. Long-term investor wants to know whether to hold or sell. Mayuresh, ONGC, what's your view? Our viewer has bought it at 188 rupees.
So again, I think it's a typical story in terms of how the oil prices might pan out henceforth. With higher oil realizations, obviously in the quarter gone by, they realized at $74.2 per barrel, and that probably abetted a very strong P&L growth. But a large element in terms of crude prices probably staying between 70, 80, and the rupee equation against the dollar probably at these levels. I think that does create some amount of concerns or headwinds when it probably comes to the subsidy sharing. They have not shared subsidy so far, but if there is any burden on the exchequer, they might need to do so. So I think that headwind and overhang is something which gets played out on the stock at this point of time. But even if you look at the expectations in terms of oil production, Mangalam, so I think the expectation from a standalone basis for FY20 is somewhere around 24, 25 MMT, and the 3 MMT coming in from their subsidiaries or their JVs. Similarly, for their gas production, I think the expectation is close to around 25.5 BCM, and 1 BCM coming from their subsidiaries. So the gas prices probably can get revised for the quarterly update that we're probably seeing. That can abet that. The rising crude prices obviously have a straight effect in terms of net realizations. The dividend yield probably is again around that 1.8, 1.9% mark. So I think there are some factors which add solace to the stock, but there are few overhangs as well. But in a nutshell, I think if the investor has a long-term view and patience, she can probably hold on to the stock.
All right, Mayuresh, Prakash, thanks very much for joining in and for advising our viewers this afternoon. For the moment, let's also focus on KEC International. Remember, just when we started this show, the company had announced that they had won a 1,000 crore rupee plus order. Vimal Kejriwal, the MD and CEO of the company, now joins in. Mr. Kejriwal, good afternoon. Congratulations. I understand the bulk of this 1,000 crore plus order has come for your T&D business. So first up, can you give us a sense of what your overall order book now looks like post this order win, specifically the T&D business, and also what's in the pipeline?
So, our overall order book is roughly around 18,000 and odd crores. Okay, of which roughly around 70% and odd is from the transmission sector. Okay. So I'll say actually 60% is from our normal transmission, 10% is from our SE. So 70% is from our transmission sector and 26% is from our railway business.
So what does this take your order inflow for this quarter to? You had around 2750 crores in the first quarter. This quarter, how much is it? And how much is it likely to be this year?
So this quarter we are roughly around 3,759 crores, which is almost similar to what we had last year also.
And what about orders where you are L1 already?
So we have an L1 of around 3,000 and odd crores. Okay, which is basically between almost 1,000 crores from power grid and the rest are others. Railways is around 1,000 crores.
What kind of margins do you have on these orders, and are they in double digits is what I want to know, because last time you said there is no meaningful upside for your margins and you refuse to revise it upwards of 10%.
So margins would still be around 10%, yeah.
All right.
And, you know, in terms of Q1, the disappointment had come in from the T&D business. Are things picking up pace? I mean, is this just one of the many orders that's lined up? Could you give us some color on how, on the ground, the business and ordering is looking like?
So T&D per se, India has been slightly slower than what we would have loved it to be, but it's getting made up by orders from Africa, some part in Middle East, and also from the SAARC countries. We have quoted a large number of tenders in Bangladesh, and we expect some orders to come in from that piece of it. Overall, we are still at the same levels in terms of business breakup, but the revenue has been slightly on the lower. If you look at, when you say disappointment, was basically the revenue growth was not there in the first quarter. I think mainly driven by the Bengal Panchayat elections, where we had a huge labor influx going back. And Karnataka is one of our large states. So Karnataka had the state assembly elections. So we did have some setback in the revenues there. And I think now with the monsoon, so I think the Q2 would continue in the same way. But I think for the overall, what we've been talking about, 15% revenue growth, we are very confident that we'll be able to maintain that.
Right. Sir, of the 1,000 crore orders that you've won, how many of these are international export and how many of these are domestic?
So most of these orders in the transmission are from the international market. Okay, domestic is not very many, but otherwise the solar and the cables is roughly from the India market. So overall, I'll say split on an overall basis would be around 50-50.
And you maintain your revenue growth guidance of 15% for the whole year?
Yeah.
Right.
All right, Mr. Kejriwal, we'll leave it at that. Thanks very much for joining in. We hope to touch base with you soon. That's the word from KEC International. They've announced her order win. But for the market, just keep your eye on, you know, this last hour move. As of now, it's on the flattish side. There was some bit of recovery coming in from the lows, but it doesn't look like there are a lot of takers out there and just shy of moving into the green. The mid-cap index, though, is in the green, but just barely so.
Just barely so, and a couple of them are losing as we speak. So we'll pull up something like a Motherson Sumi. That one's at the low point of the day. Not a good August for them, down about 6% this year itself. That stock is down about 21%.